Buying a home is probably the biggest financial decision you'll ever make. And while there are great opportunities across America, there are also places where you need to be extra careful, where the risks are higher, the costs can surprise you, or the market conditions could work against you. Today, we're looking at 5 states where home buyers need to proceed with caution. I'm not saying don't buy in these states. Plenty of people do successfully, but if you're considering them, you need to go in with your eyes wide open and do extra due diligence. We'll talk about what makes these markets tricky, what the hidden costs are, what can go wrong, and most importantly, what you should do to protect yourself if you decide to buy there anyway. Let's get into it. State number 1, Florida. Let's start with a state that millions of people are moving to. Florida, beautiful, but buyer beware. Florida is one of the hottest destinations in America right now. No state income tax, beautiful weather, beaches, and a growing job market. But there are several reasons buyers need to be extra careful. Why you need to be careful. The insurance nightmare. This is the number one issue. Home insurance in Florida has become outrageously expensive, and in some cases, nearly impossible to get. The average homeowner in Florida now pays around $10,000 to $11,000 per year for home insurance. Let me repeat that, $10,000 per year. That's nearly triple the national average. Multiple major insurance companies have completely pulled out of Florida. State Farm stopped writing new policies, Farmers Insurance left, AAA pulled back. Why? Because hurricane losses have been devastating, and climate change is making storms more intense and frequent. Now, many homeowners are forced to use Citizens Property Insurance, the state-backed insurer of last resort. It's more expensive and has less coverage. Some homeowners are paying $15,000 to $20,000 annually just for basic coverage. Here's what this means for you. That affordable $350,000 home might cost you $850 plus per month just in insurance. Your mortgage lender will require insurance, so you can't skip it. What to watch out for. Before you even make an offer on a Florida home, call insurance companies and get actual quotes for that specific property. Don't assume, get real numbers. Some properties are literally uninsurable at any price. Hurricane and flood risk. Florida gets hit by hurricanes regularly. Hurricane Ian in 2022 caused over $110 billion in damage. Hurricane Idalia, Nicole, Michael, the list goes on. Even if you're inland, you might need flood insurance, which is separate from homeowners insurance and can cost $2,000 to $5,000 plus annually, depending on your flood zone. Storm preparation isn't cheap either. Hurricane shutters, impact windows, generators, evacuation costs, these add up. Sea level rise and coastal erosion. If you're buying coastal property, understand that sea level rise is real and accelerating. Properties that aren't flooding now might flood regularly in 10 to 20 years. This affects both livability and resale value. Some Florida properties are already experiencing sunny day flooding during high tides even without storms. Property taxes can jump. While Florida has homestead exemptions that limit property tax increases for primary residents, if you're buying as a non-resident investor or vacation home, you don't get that protection. Property taxes can increase significantly year over year. The HOA nightmare. Many Florida properties, especially condos, have HOAs, homeowners associations. After the Surfside condo collapse in 2021, Florida passed laws requiring condo buildings to maintain larger reserve funds and conduct more frequent inspections. This has led to massive special assessments. Some condo owners have been hit with $50,000, $100,000, even $200,000 plus bills to cover building repairs. Some people literally had to sell or walk away because they couldn't afford it. What buyers should do. Get insurance quotes before making an offer. Know the real cost. Review HOA financials carefully. Look at reserve funds and upcoming assessments. Check flood maps. Understand your flood zone. Factor in storm prep costs. Budget for hurricane season. Consider inland properties. Lower insurance, less flood risk. Buy newer construction, built to current hurricane codes, often better insurance rates. Calculate total monthly costs: mortgage plus insurance plus HOA plus taxes plus flood insurance. Bottom line, Florida can work, but the insurance crisis is real and dramatically affects affordability. Do extensive homework before buying. State number 2, California. Next up, the Golden State. California offers incredible lifestyle, job opportunities, and diversity, but buyers need to be extremely careful about costs and risks. Why you need to be careful? Sticker shock. California home prices are among the highest in the nation. The median home price statewide hovers around $800,000 to $900,000. In desirable areas, San Francisco, Silicon Valley, Los Angeles, San Diego, Orange County, you're looking at $1 million plus for modest homes. This means massive mortgages. Even with a 20% down payment on an $800,000 home, you're borrowing $640,000. At current interest rates, that's a mortgage payment of around $4,500 to $5,000 plus per month before taxes and insurance. Many buyers become house poor. So much of their income goes to housing that there's little left for savings, retirement, or emergencies. Wildfire risk. California wildfires have destroyed entire communities. The Camp Fire, the Woolsey Fire, the Dixie Fire, thousands of homes gone. Large areas of California are designated high or very high fire risk zones. This includes much of the Sierra Nevada foothills, areas of the Bay Area hills, parts of Southern California, and more. Just like Florida with hurricanes, insurance companies are pulling out of high fire risk areas. Some homeowners can't get coverage at all. Others are paying $5,000, $10,000, or more annually for limited coverage through California's FAIR plan, the high-risk insurance pool. What to watch out for? If you're buying in a fire-prone area, understand that insurance may be unavailable or extremely expensive. Evacuation during fire season is stressful and dangerous. Power companies now shut off electricity preemptively during high fire risk, public safety power shutoffs, leaving you without power for days. Smoke during fire season affects air quality even if you're not directly threatened. Earthquake risk. California sits on major fault lines. The big one is expected eventually. A major earthquake on the San Andreas Fault or Hayward Fault could cause catastrophic damage. Standard homeowners insurance does not cover earthquake damage. You need separate earthquake insurance, which is expensive and has high deductibles, often 15 to 20% of your home's value. Most California homeowners don't have earthquake insurance because of the cost. This means if a major earthquake hits, you could lose everything. High taxes. California has the highest state income tax in America, up to 13.3% for high earners. Combined with federal taxes, you could be paying 40 to 50% of your income in taxes. Property taxes are somewhat protected by Proposition 13, limited to 1% of assessed value plus small annual increases, but sales taxes are high, and overall cost of living is among the highest nationwide. Regulatory environment. California has extensive regulations affecting homeowners. Strict building codes, which is good for safety, but increases construction costs. Solar panel requirements on new homes, expensive up front. Water restrictions in many areas. Complex environmental regulations. These aren't necessarily bad, but they add costs and complexity. Population outflow. California has experienced net population loss in recent years. While the economy remains strong, people are leaving for lower-cost states. This could eventually affect home values, particularly in less desirable areas. What buyers should do. Understand fire and earthquake risk for specific properties. Check Cal Fire maps. Get earthquake insurance quotes. Decide if it's worth the cost. Calculate total tax burden, state income tax plus property tax plus sales tax. Have substantial emergency fund, 12 plus months expenses given high costs. Don't stretch your budget. Leave room for unexpected costs. Research neighborhood crime and school quality. Varies dramatically within cities. Consider commute times. California traffic is notorious. Bottom line, California offers a lot, but you're paying a premium. Make sure your income can truly support the lifestyle and understand the natural disaster risks. State number 3, Louisiana, 3 to 4 minutes. Transition. Now let's talk about a very different type of risk. Louisiana, low prices, high hidden costs. Louisiana has some of the most affordable home prices in America, but those low prices come with significant risks that buyers absolutely need to understand. Why you need to be careful. Hurricane Central. Louisiana is ground zero for hurricanes. Hurricane Katrina devastated New Orleans and the Gulf Coast. Hurricane Laura, Hurricane Ida, Hurricane Zeta. The state gets hammered regularly. Hurricane damage isn't just about the storm itself. There's flooding, wind damage, power outages that last weeks, disrupted water systems, mold issues afterward. It's traumatic and expensive. The insurance double whammy. In Louisiana, you often need 2 separate insurance policies. Homeowners insurance for wind and general damage, expensive. Flood insurance, separate policy, often required by lenders, also expensive. Combined, these can cost $3,000 to $6,000 plus annually, even on a modest home. On a $200,000 house, that's $250 to $500 per month just for insurance. Many buyers see a cheap house price and don't factor in these insurance costs until it's too late. Flood risk everywhere. Louisiana is mostly at or below sea level. Even if you're not right on the coast, you can flood. Heavy rain, storm surge, river flooding, it all affects Louisiana. Check the FEMA flood maps carefully, but understand that flood maps are based on historical data. Climate change and coastal erosion are making things worse. Coastal land loss. Louisiana is literally disappearing into the Gulf of Mexico. The state loses roughly a football field of land every 100 minutes due to erosion, subsidence, and sea level rise. Communities that were once inland are now coastal and increasingly vulnerable. This long-term trend affects property values and livability. Economic challenges. Louisiana's economy has been heavily dependent on oil and gas, which is cyclical and declining. The state has one of the highest poverty rates in America and lower than average income levels. Job opportunities are limited compared to other states, particularly for white-collar professionals. If you lose your job, finding another comparable one locally can be difficult. Infrastructure problems. Louisiana consistently ranks near the bottom for infrastructure quality. Roads, bridges, water systems all need significant work. This affects quality of life and can lead to higher local taxes to fund repairs. Education concerns. Louisiana ranks near the bottom nationally in education. If you have kids, this is a major consideration. There are good schools, but they're concentrated in specific areas. High crime in some areas. Parts of New Orleans and Baton Rouge have high crime rates. While there are safe neighborhoods, you need to research carefully. What to watch out for. Don't just look at purchase price. Factor in insurance, flood risk, and potential storm damage. Understand evacuation logistics. Where will you go during a hurricane? How often will you evacuate? Check elevation. Higher is better in Louisiana. Research specific neighborhoods. New Orleans has dramatic variation between neighborhoods. Consider whether you can handle the climate. Hot, humid, long summers. Hurricanes are stressful. What buyers should do. Get actual insurance quotes for the specific property, both homeowners and flood. Visit during different seasons. Experience the summer heat and humidity. Research elevation and flood history. Has this property flooded before? Check building codes. When was it built? To what standards? Have emergency fund for evacuations and storm prep. Hurricanes are expensive. Understand job market. Can you support yourself if you need to find new work? Research schools if you have kids. Quality varies dramatically. Bottom line, Louisiana can be affordable and has unique culture, but the risks are real and the hidden costs are significant. Low purchase price doesn't mean low total cost. State number 5, New Jersey. Transition. Now let's talk about a very different type of risk. New Jersey, property tax hell.
New Jersey might surprise people on this list, but it has one of the most challenging housing markets in America for a specific reason: property taxes. Why you need to be careful. The property tax nightmare. New Jersey has the highest property taxes in the entire United States. Not just high, the highest. The average property tax bill in New Jersey is over $9,000 per year, but in many towns, particularly in Bergen County, Morris County, Essex County, and other desirable areas, property taxes are $15,000, $20,000, $25,000, even $30,000 plus annually. Let me put that in perspective. On a $500,000 house with typical New Jersey property taxes of $18,000 per year, that's $1,500 per month just in property taxes. That's more than many people's entire mortgage payment in other states. Why are taxes so high? New Jersey has many small municipalities, each with its own government, schools, and services, very inefficient. Strong public employee unions and generous pension benefits create high costs. Excellent public schools in many areas. You're paying for quality, but it's expensive. High cost of living overall. What this means for buyers. That affordable $400,000 house might cost you $1,200 plus per month in property taxes alone. Add in your mortgage, insurance, and maintenance, and your housing costs explode.
Many New Jersey homeowners are shocked when they realize how much they're paying annually, and property taxes tend to increase over time. High income taxes, too. New Jersey also has high state income taxes, up to 10.75% for high earners. Combined with property taxes, the tax burden is among the highest in America. Expensive cost of living. Everything costs more in New Jersey. Groceries, utilities, car insurance, among the highest in the nation. Gasoline, your paycheck doesn't go as far. Population loss. New Jersey has been losing population, particularly retirees and middle-class families, to states like Florida, North Carolina, and Pennsylvania. People leave primarily because of the high taxes and cost of living. Population loss reduces housing demand over time, which can suppress property value appreciation. Geographic constraints. New Jersey is geographically small and densely populated. There's limited land for new development, which keeps prices elevated. But this also means you're often dealing with older housing stock that needs maintenance and updates. Transportation costs. Many New Jersey residents commute to New York City for work. Between tolls, George Washington Bridge, Lincoln Tunnel, Holland Tunnel, all expensive. Parking and transportation costs. Commuting can cost $500 plus per month. What to watch out for? Don't look at just the purchase price. Property taxes make or break affordability. Research specific towns. Property taxes vary dramatically town to town. Factor in commute costs. If you're working in NYC, this is significant. Consider whether you'll stay long-term. High carrying costs make short-term ownership expensive. What buyers should do. Research property taxes for specific towns. Use New Jersey's property tax database. Calculate total monthly housing costs. Mortgage plus taxes plus insurance plus maintenance. Understand your income tax burden. State plus federal plus property taxes. Compare towns carefully. Property taxes can vary by $10,000 plus for similar homes in neighboring towns. Consider Pennsylvania border towns. Lower property taxes, but check school quality. Factor in commute costs. Tolls and transportation add up. Plan for tax increases. Property taxes trend upward over time. The one positive. New Jersey does have excellent schools in many districts, good transportation access to NYC and Philadelphia, diverse communities, and proximity to beaches and mountains. You're paying for location and quality of life. Bottom line, New Jersey can work if you have high income and value what the state offers, but the property tax burden is staggering. Many buyers are shocked by the total cost of ownership. Key takeaways. So, what have we learned? These 5 states, Florida, California, Louisiana, Arizona, and New Jersey, all require extra caution for different reasons. Florida, insurance crisis and hurricane risk. California, extreme prices and wildfire and earthquake risk. Louisiana, low prices but high hidden costs and hurricane devastation. Arizona, water crisis and extreme heat. New Jersey, property tax burden crushes affordability. The common thread. In each case, the total cost of owning a home is much higher than it first appears. It's not just about the purchase price or mortgage payment. It's about insurance costs, property taxes, utilities, climate risks, natural disasters, long-term sustainability. What should buyers do? Here's my advice if you're buying in any of these states. 1. Calculate true total monthly housing costs. Don't just look at mortgage payments. Add up principal and interest, property taxes, homeowner's insurance, flood insurance if needed, earthquake insurance if needed, HOA fees, utilities, especially in extreme climates, maintenance and repairs. This is your real monthly housing cost. 2. Get actual quotes before making an offer. For insurance, property taxes, and utilities, get real numbers for the specific property. Don't guess or assume. 3. Visit in different seasons. If you're considering Arizona, visit in August. If you're looking at Louisiana, experience the humidity. Don't just visit during the best weather. 4. Research hyper-locally. Even within these states, specific towns, neighborhoods, and properties vary dramatically. Do detailed research on the exact area you're considering. 5. Have a larger emergency fund. In high-risk or high-cost states, you need 6 to 12 months of expenses saved. You need to be able to handle hurricane evacuations, earthquake repairs, job loss, unexpected tax increases, major maintenance. 6. Don't stretch your budget. In these states, more than anywhere, leave financial cushion. Don't max out your approval amount. The unexpected costs will come. 7. Think long-term. Are these challenges sustainable for 10, 20, 30 years? Can you afford rising costs? Will climate change make things worse? 8. Consider alternatives. Are there neighboring states that offer similar benefits with fewer risks? For example, instead of Florida, consider North Carolina or Georgia. Instead of California, consider Oregon or Washington, though they have their own issues. Instead of New Jersey, consider Pennsylvania. Instead of Arizona, consider Nevada or New Mexico, though Nevada has water issues too. 9. Work with local experts. Real estate agents, insurance agents, financial advisors who know these markets can provide invaluable insights and help you avoid mistakes. 10. Be honest with yourself. Can you truly handle evacuating for hurricanes? $10,000 plus annual insurance bills? 115-degree summer heat? $25,000 annual property taxes? If not, it's okay to choose a different state. Conclusion. Look, I'm not trying to scare you away from these states. Millions of people live happily in Florida, California, Louisiana, Arizona, and New Jersey, but they went in with eyes open, they did their homework, and they planned accordingly. That's what I want for you. Be extra careful. Ask hard questions. Get real numbers. Don't let excitement about a house cloud your judgment about the total financial picture. Buying a home is a huge decision. Take your time. Do your research, and make the choice that's right for your situation and your financial future. If this video helped you, please give it a thumbs up and subscribe for more real estate insights. Drop a comment. Are you considering any of these states? What concerns you most? I'd love to hear from you. Thanks for watching, and I'll see you in the next one.